Hey, welcome to the Closing Beat, everybody. Happy Friday. Hope you had a great week this week. This is just a quick stock market update show that we do to talk about the good and the bad that happened over the week. We'll go over everything, of course. And, hey, we're financial advisors here at Jazz Wealth. We come to you every day just to give you an update of the overall stock market and just, help our customers, help you guys that like to follow along here. I appreciate all of you watching. Well, every Friday we announce our Guess the Dow winner. It's a game that we're playing here, bottom right-hand corner of your screen. You can go to the website. You still have until later tomorrow to guess where you think the Dow will close next week. And so our winner from last week was Michael. He guessed 26,590.01 on the Dow. So he was the closest without going over Dow closing, according to the data that we're using for this, 26,599.96, the official close for the Dow there. So congratulations, Michael. He's not one of our customers, so we'll be sending him a $100 gift card. The email will be going out shortly to get your address. You're welcome to play. There's no spam or anything. We don't. It's just a fun game. We're not like storing data or anything, so nothing like that. And I'll tell you, in the last hour of the market today, there were 29 potential winners, meaning at any one given point in the last hour, 29 people would have won if the market stopped there. That's how violent the last hour was in the market. If you take that last little short covering pop right before the close, you add another 18 people in total. So that's how sort of back and forth the market, or at least the Dow was right before the end of the day. So just cool to watch. We were just kind of like cheering along, like a customer would look like they were going to win, then somebody else, then all these people up here. So it was a lot of fun to watch there. And it's a great way to stay engaged. So if you just want to put a guess in there, just to stay engaged day to day and see where you're at with it, I think it's cool. It keeps people in tune with, the markets and their investments, hopefully. Hey, we did a class last night for customers, stock market loss statistics, and I got more emails about that class than any other class from our customers saying they really enjoyed that one. So awesome. I put them together and share things with you. So if you are one of our customers, you can now go in the dojo. Actually, you can't. I forgot to put it up there. Got to put it in the dojo for you, and it'll be available. I will do that as soon as we're done here. All right, this weekend, you got the G20 meetings. Mainly, everybody's focused on the oil discussions and, of course, the Trump and Xi meeting, which is set for lunchtime on Saturday. I don't know how they're going to have any time to eat lunch. There's just going to be people everywhere. It's going to be crazy. But anyways, because of that, you got people taking their chances going into the weekend. The Dow was higher by 71. The S&P added 16. The NASDAQ added 38. And you go, wait a minute, Dustin, you told me when it's not a sort of cohesive, unified move in the market, I'm supposed to ask why, and that's right. So the Dow added 71 points today, and the S&P added 16. Why was the Dow not up around 170 points, or why was the S&P not up only 70? Something's a little bit off there. Remember, it's about a 10th relationship, give or take a little. If the Dow's up 100, you expect to see the S&P up 10, and that would be sort of a unified move for the day. If there's a disconnect there, you know that something was a little amiss, and today, again, in the Dow, that's going to be a reason why. So the Dow was higher, the S&P, but it, like I said, it's a little off there. It was only higher by about half of the S&P, and that was because some of the big losers in the Dow there. You had the Cisco, you had Dow, DOW lower on the day, and you had some of the healthcare names, UNH and J&J, moving lower on the day. Up at the top there on the right, you'll eventually see the Russell. The Russell had a great day again. That's day 2 of the Russell having a good day. I can't share the charts with you today. We're making some adjustments there to make things hopefully a little bit better, but the Russell 2000 added over 1% again, so starting to really shape up there. And I'll be honest with you, if you have a 401k and you're sort of diversified in that, or you're with us here and you have small caps in there, that's been a laggard. It's been one of sort of the struggling areas there, so it's nice to see it start to pick back up, and you see that performance in a broad-based sort of portfolio start to pick up as well. As far as what we've been talking about this week, the leaders that brought the markets to highs were defensive in nature, the defensive areas of the market. The laggards that sort of still did well but didn't quite help support the markets, they were the ones that sort of made the markets a little messy there for a while. And what we have again today, we had everything come together. So it's been kind of cool to walk you guys through this beforehand to sort of show you how things have been going. Today is sort of a replica of yesterday. Almost all of those leaders that brought the markets to highs had a good day. All of the laggards that had, been behind a little bit, they also had a good day as well, with the exception of consumer staples, basically flat on the day. So that's awesome. You got regional banks, you got transports moving higher, you got retail even, which is sort of a tough area. Communication services all moving higher. So that definitely helps, right? It helps move the markets higher. It helps convince more people that they need to dive in, because more and more mutual funds, more and more IRAs, they all start to look better and better and better, which usually gets people excited to invest more. All right, our focus sort of area thing for the day. I'm going to talk about this for a second. I saw on TV, that this is the end of the first half of the year, right? The month's over. The first half of the year is officially over. Lots of records to talk about. But I saw they mentioned that this would be the 5th time that both the S&P and bonds were positive by 10% or more in a given half year, really, which is where we're at. And so I like that. And I'm like, well, let's look at that a little deeper here and see what's going on. So we looked into it, and we found that not once did the S&P finish where it is at its halfway mark, meaning as good. Let me try that again. So the S&P is here, and the half of the year is over, right? There is not one time in history where that's happened in the past where the S&P finished anywhere above where it was currently at. It has always finished below, right? So this sort of adds to the class that we did last night. Do you expect the stock market to finish right around here or better, or right around here or worse? And we showed those stats to prove to you it's probably not going to finish better than where we're at currently. Well, today I thought it was ironic. It was right on TV. They said that was what happened. We looked into it, and so that's what we came up with. Now, the good news is all but one time when the markets finished here for the first half of the year, all but one time were they not at least a gain of double digits. So we've got double-digit gains here so far this year. It just shows that every time the market's finished a little bit lower. Only once was it negative on the year. But so good news, bad news, right? We're here. We're enjoying a nice little rally in the market. But the odds now show you we're not going to finish here. We're going to finish somewhere below it, even if we end up going higher and then pulling back. So just like to point that out there. Anyways, the name of the game this week was catch up, really. All the lagging sectors did catch up overall, and all of the leaders were able to sort of pull back, take a break, and then give us a little bit of a rally. We'll see what happens going into next week, which also starts a new month. We do a portfolio update for our customers every month, right, to let them know, and it's really detailed. I love putting these things together for them because we go into just extreme detail there. I'm going to share some of that with you here today. July is historically very strong. Average return over the last 20 years, 3.36%. So that's what they call it. You'll see on like Bloomberg, they'll say seasonal tailwinds, right? So it's just seasonality movements of the markets. July is typically very strong. All right, if we dig a little bit deeper, those of you go, well, that's great. What do I buy, Dustin? Where do I go, and what do I stay away from? Well, if we look over the last 20 years, the best performing sector ETF, is actually biotech, the IBB. So if you're wondering, just like, hey, if I have biotech in my portfolio, you expect it to do pretty well. Average gains 3.57%, median gain 4.75%, so it's a good performer by far compared to the other ones. And you know what the second best performer is? China. FXI. Isn't that sort of interesting that over the last 20 years, China, which has also been positive more times than any other ETF out there in the month of July, China positive 86% of the time with a median gain of 3.79 or average gain of 3.41. I don't know if you care about those numbers, but it lets you know that those two areas are the better performers historically, statistically. Doesn't mean it happens this time. It just means that's the way it was in the past. So I just think it's kind of interesting. We got this important trade thing coming up here tomorrow, really, and continuing on probably. And you find that this is one of the better performing areas. So I just found that was kind of interesting. If you like the biotech, the last time it was actually negative in July was 2014, and it was down by 4.5%, 4.68% to be exact. If you like the China thing, the last time it was negative was 2015. It lost 11%, so a lot of volatility there if you're paying attention. What's the worst area for the month of July? Where's the weakness there? This bugs me a little bit because the weakest area is the Russell 2000. How we've been saying the Russell 2000, oh my gosh, this thing's not looking too good. Well, for the month of July, it is not a good performer. It is typically, the average decline there, median decline 1.4, average decline 1/4%. So it's good to see the Russell starting to participate there, help us all out there. I'm going to try something new here. You got 71% of the stocks, 71.6% of the S&P now above the 50-day moving average. It was 63.3 yesterday. What does that tell you? Just tells you REITs came back a little bit, right? Just a little bounce in REITs because they pulled back kind of hard. But it shows unity in the overall stock market, so that's good. Healthcare has the most stocks over the 50-day moving average, followed by utilities. And here's the new thing I'm going to try. There were 23 new 52-week highs today. I point those out because I know some of you like playing momentum. Of the 23 new 52-week highs, you got some interesting technical patterns, and that's the new thing. I'm going to point out some interesting technical patterns. I'm not telling you to buy the stock. I'm not telling you to sell it if you own it. I'm just telling you it looks interesting, and technical traders may start to pay attention. Symbol DOV, although I can't show you on the screen, new breakout. McDonald's, new breakout. Cerner, new breakout. CERN, new breakout there. And so we'll follow up with this when we have the charts all adjusted and everything. But 3 interesting technical patterns from the 23 new 52-week highs. And there were no 52-week lows. All right. Going into next week, what do we got here? No real interesting earnings to start the week. Remember, you have L3 being replaced in the S&P 500. Talk about that all week. You got Legg Mason paying out 40 cents. Kimberly-Clark paying out 28 cents in dividends. We own both of those. Looking forward to that. And that's pretty much it, right? There was some reports that, Bloomberg reported this. They're tricky. Boeing pilots had reported software issues on other jets besides the 737s. Talk about kicking someone while they're down, huh? Apple loses its chief design officer. We got that down here in the notes. Constellation Brands did report earnings. I'm sorry about that. I missed that one yesterday. Beats on earnings, pretty good, actually. Revenues came in as expected. They raised their guidance there. And then the other one was Nike missed on earnings, but guided as expected. So that's really all I have for you. Let's move on to questions if you have any, and then you guys can go away for the weekend. All right, cool. Chris says, I like a drop, man. I get tired of buying new highs. I love it. I like a drop, too. I'm a discount guy. I like when the markets fall and people get nervous. I would rather try to look at a market decline and figure out how bad it's going to be versus just like buying uptrends. I don't know. I just don't like it. Tony listens every day on the way home from work. Thank you, Tony. I appreciate it. Hopefully, you're not texting. You're just kind of watching there. Just don't forget to watch the road, man. When a merger of companies occurred, does the cash disbursement count as capital gains in the year? When a merger, so it depends. These can be very tricky. So if it's just a transfer of stock, there's some ratio and you just own the stock there. If they are taking the company private and they're paying out those shares, first of all, you should sell the shares anyways. So if you have an individual account and you have a gain, it's going to count as a taxable gain. That's the sort of general advice there. Don't necessarily do that just because I said so. But yeah. Gary says a lot of your charts have inverse head and shoulder patterns. Do you take this indicator into account when looking at price direction? It's a how do you say it? Like a medium term sort of technical pattern that people like. I agree. I mean, it's a very obvious one, an easy one for like algorithms to pick out, and where the charts that draw it on there and show you that actual pattern. It's a midterm pattern. I like using it more as confidence. Like if you already have a reason you're buying a stock or you're in a stock or you're selling a stock, whatever, and you happen to see, people are going to follow those technical patterns. So there will be at least some form of activity there. I like to use it as sort of not coincidence. What am I trying to say? Like just confidence that I'm in the right direction there. Yep. What caused the crazy rally in the last half hour? Well, the little rally in the last half hour wasn't so bad. That little pop there right towards the end, that's your short covering rally. Those are people that just did not want to go into this Trump meeting betting on the downside. I don't blame them. You don't blame them at all. Shoot, you guys asked some questions there. I got to make a bigger window. If I missed it, let me know. Do you think this market rally is convincing? I think the market is ahead of expectations. You know how sometimes we'll say the stock goes too far too fast and then it needs to take a break for a while and there's no hurry to buy that stock, the stock market has been doing that. It ran up over the last few years too far too fast, and in reality, what's happened over the last few years is a whole lot of nothing, right? And I get this every now and then. Customers will be like, I don't see a whole lot of anything going on in my account. It was great for a while, it was bad for a while, and now it's great again. And that's because you go back 2 years, the market did this, right? And so we're marking time. If you're a long-term investor, you look way back, go back to like 2000 and just look what the stock market did. We're sitting near the highs, but we're marking time at those highs. We're working off all of this overpriced sort of froth in the market. And so if over even the rest of this year, we don't make much progress or we fall again, like at the end of the year, it's actually a really good thing if you're a long-term investor. I think it's a good thing if you're a short-term investor because it gives you more volatility to trade there. So I'm pretty optimistic in the long run. I think there's a lot of volatility to be had in the short run, especially with the elections and everything. Whoa, I'm so sorry. I'm just sort of skipping around because there's more questions than I thought. Do you think utilities are at a discount? No, utilities are currently overvalued, right? So we did a class for customers on overpriced and overvalued, and utilities still remain overvalued. I see that they've fallen a little bit, but you'd really like them to set and then hold for a while. Just sit there and chill for a little bit. I don't know, in my opinion. And it's gonna rain. There's a big storm coming. Mr. Sprinkles doesn't like the Fang stocks. That's cool. That's okay. I got you. Those Fang stocks can be a little bit messy. Let me see. Freeport McMoran is the question there. If you like, I mean, it's a tough one. I'll give you that. It's a tough one to say you want to try to bet on anything from here, right? It's been stuck near the lows, sort of similar to the market in reverse. It's been stuck near lows, had a little rally, and then came back to lows. That's a tough one. I mean, I get it that it's discounted, it's cheap and everything. It's an underperformer, and you worry about what if the markets do have that next pullback. This one's going right with it because that relative weakness there. Yep. Oh, you're in Europe. That's awesome. I love it, man. Why the sharp drop in oil? G20 meetings, right? Lots of discussions going forward with how they're going to handle that. You have all the big names showing up there, so could be a lot of comments based on that. And I believe there's a meeting in there somewhere where they're going to get together. I don't know for sure on that one, but a lot of volatility. You just have a lot of people saying, I want nothing to do with this while they're making those talks. And a lot of people do that, right? A lot of active traders will say, I'm buying, I sell, I play the game and find my stocks and sectors and futures or whatever. But then when there's some sort of catalyst that's coming up, a lot of times they'll back away, go over somewhere else. I don't want to mess with oil right now. Maybe I'll want to mess with something else until they work out what they're doing. Some people dive into that. They go, I like that volatility, I'll take my chances. So that's pretty much what's going on. Yep. Any reason to choose? Carnival's a tough one. I don't like those big drops like that. I know it's enticing. You see it sort of trying to recover off those lows. Remember, it's a general rule. You don't buy the first bounce after a big directional change. Yep. Nick, yeah, we talked about that Marcus last night in our customers class there. I think it means that Marcus is about to announce something new. I do. Yep. Do you think the market is overvalued, expecting 2 rate cuts, which maybe are priced in already? 100% chance, yeah, of the rate cuts in July, at least as people are pricing. I don't think it's going to happen, to be honest with you. Look at what President Powell is saying. He's not on board. You can just feel it. Yep, and Bullard, he's not on board either. You can just hear their speak there. Yep. If you need money in the next 2 to 5 years, would you sell and keep it in a money market or stay the course? Oh, 2.5 years. So you're right on the border there. I tell people when they have 2 years or less to go, you shouldn't be investing that money. That's tough, especially if it's for something important. You're going to buy a house, you're getting married, you're planning on having a baby. You don't want to invest that money. I just suggest saving it up. I know it sucks, it's like dead money or whatever, but your time frame's a little tight there. Yep. How do you adjust your customers' portfolios during the election year? We don't make adjustments because of the election. We make adjustments because of the action that may have happened through the election. The Trump election was exciting, I'll give you that, especially overnight if you happen to follow that. But I'm not going to use an outside event to make adjustments. Never, 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 never. Can't comment on Mankind. I'm not allowed to comment on that one, just personal relationships there. What's your take on Realty Income, ticker O? Yeah, we own the ticker O. Yeah, it's a good one. It's very strong, right? So you can't complain about the performance there. I know it's very, very, very popular with people. So I certainly understand that. REITs as a whole pulled back just like that did. So if you see that pullback and it makes you a little nervous, I wouldn't be. You go, the whole sector fell just like that. So not a big deal. If only O fell that way and REITs were still doing well, now you have a reason to be worried. But I don't think you do. Yep. You got it. Will you get taxed on dividend payments? Well, it depends on the account, really, right? If it's a general investing account, absolutely. All right, I think that wraps it up. And I think I also, it's good timing because of the rain. It's about ready to storm pretty bad here. Hey, I appreciate you guys watching. I hope you have a great rest of your week. Michael, congratulations, winning the $100, getting a gift card from Jazz Wealth. If you want to play, go guess the Dow. Have some fun with that. We'll be back next week, of course, and we'll do this all over again. Enjoy your weekend. See ya.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.